So we're joined this week by attorney Jason Billick, and we're going to dive back into a host of issues that are affecting homeowners and sort of the current landscape regarding mortgages and sort of consumer finance at large. So, Jason, thanks for being with us again.
Yeah, glad to be here.
So we have a new administration in the White House, and things are a little bit chaotic. And I don't think anyone really knows what the future holds because everything seems to be up in the air all the time. But things are definitely changing rather rapidly.
Yeah, that's an understatement. Um, it's kind of funny. Here we are, getting ready to start a new season of this podcast, and we're going to jump out of the gate talking politics.
Right.
Exciting topic.
Probably, yeah, probably not smart, but oh well.
Well, yes and no, right? I mean, I hate to say it, but politics does play a big role on how we read laws, interpret laws, and so I think this is kind of a good place to start. There's a stereotype when you think about mortgage lending. I think the stereotype is that conservative-minded legislatures will tend to pass regulations that favor banks more so than consumers,
Sure.
and liberal-leaning lawmakers will tend to pass rules and laws that favor consumers. And I could probably sit here and count dozens of examples of that, of supporting that statement. But, it's not that black and white. And if I really think hard about, the last 15 years I've been practicing, mortgage law and real estate law, I could probably find several examples where that's not true at all. But it's important to know, and it's important to, when you're reading the news, or I guess people don't read newspapers anymore, but however you digest your news, whether it's through a podcast or you're scrolling through your Apple phone, seeing what your news headlines are for the day, or
Hmm.
if you're a big NPR listener like I am, you're probably going to come across things that are happening in the financial world, and it's important to know what those things are and how they're working because it could impact your ability to either finance a home in the future or geez, maybe even refinance or if you're in the market to sell. So these are all important. So yeah, going back to your original question, yeah, it's chaotic right now, and I think the answer to the question is we don't know. And hey,
Right.
episode over.
Right.
We don't.
Right.
No one knows.
Right. Right. Thanks for
But I think it
listening.
is
Right.
interesting to kind of look into a little bit of some of these details to see what we could expect. I don't have a crystal ball in front of me, but maybe we could figure out some certain things. But I think it's a no-brainer. The Trump administration is much different than the Biden administration and how they're going to tackle mortgage lending. So I guess let's take a look at what's changed so far, and then maybe get a sense as to what could possibly happen in the future. Man, we could spend weeks on this topic. But one area I like to start with is, and here's a real snoozer for our listeners, the conforming loan limit.
Uh-huh.
You're like, all right, I'm done. So Fannie and Freddie Mac, or Fannie Mae and Freddie Mac, are restricted by law when it comes to purchasing single family mortgages. And these are mortgages that have balances below a specific amount. And this is known as the quote, conforming loan limit. So put simply, conforming loans are loans that can be sold to Fannie or Freddie after you close on a home,
Right.
and they account for surprisingly a large share of America's mortgages. Any loan that goes beyond that conforming limit are called jumbo loans. So if there's anyone here that's ever financed, if there anyone on this podcast that's listening right now, and if they've ever financed a home with a third party lender, they may recall that after they close, within 1 to 2 months, they get a letter in the mail, and it's like, "Hey, uh, Joe's Lending has sold
Right.
your mortgage to Fannie
To
Mae or Wells
right.
Fargo or
To
Bank
Wells
of America."
Fargo. Right. Yeah.
Yeah,
The top four loan services, right, I think, still are Wells Fargo, Bank of America, Chase, and PNC. So it's usually one of those four to
right.
buy it. Right.
And there's a couple big servicers that have combined over the years. I mean, Mr. Cooper, Nation Star, all
Hmm.
those guys are still players in the market. So, yeah, if you bought a home recently, chances are you've gotten one of those letters that your mortgage at least has been sold to somebody else. So what happens is these limits, these conforming loan limits, they change annually. They change every single year, and they've gone up over the last few decades. And I think there was a permanent formula that was implemented back in '08 called the Housing and Economic Recovery Act, HERA, and that law basically establishes what that formula is going to be. And it's my understanding as of the date of this recording that there is already a limit for 2025. Um, but there was some concern with the Trump administration whether or not they were going to disrupt this process. I read a CNBC article recently where they interviewed the new head of the Federal Housing Finance Agency, and the director basically said that they were not considering a reduction in the conforming loan limit. Now, take that with a grain of salt because we hear all kinds of things coming from this administration and they change their mind.
Sure.
One day you got tariffs, the next day they're holding it. So but as of right now, they're not going to do anything as far as reducing it or increasing it. So if you look at, heck, you could just go to the Fannie Mae site in 2025, as of today, I believe you can borrow up to $806,500 for a conforming loan. But I believe that limit is higher in some areas. Of course, if you need to borrow more than that, then you're going to need to, look at jumbo loans. And why? So I guess the question is, why is this important, right? If I'm a consumer, a first-time home buyer, why do I care about this term or this phraseology? It's important because consumers, this loan limit impacts our price range when we're looking for a home. So obviously, my recommendation, anyone listening, is that you always want to follow the advice of your lender to determine what's best for you. But interest rates, qualification requirements of whether you qualify for financing, and loan availability all play a role in this process. And so this loan limit actually has a big impact on your home buying process. And I think that's why it matters because if home prices are increasing as they have been over the years,
Right.
wouldn't it make sense to increase that limit? Because I would argue that if you increase the limit, it would, higher limits can help first-time home buyers and those with limited savings. Now, I'm sure there's some great arguments as to why the limits shouldn't be raised. And, this isn't one of those episodes where I got, my good buddy who represents Wells Fargo down the street on the call.
Right.
We could do that later on. One of the things I'd like to do in the future is get some lawyers, good friends of mine who do represent the banks, just to kind of give their perspectives on things. But, just from me, consumer law advocate, I would argue that increasing those limits would probably be a good thing. But this is kind of the first place I look at as to, what's the lay of the land for 2025 and beyond. Um, I think the next step you need to look at is interest rates.
Hmm.
Right now, interest rates are fairly high compared to what we've, been experiencing, as of late. But I mean,
Right.
I, I don't know if anyone here on the call was ever lucky to refinance their home a few years ago, capturing those 2, 3, 4% interest rate. Man, I don't think I'm ever going to see that again in my lifetime.
Right.
I doubt
No. Right. I mean, and the unfortunate sort of flip side, in my mind, with that market is a lot of folks bought when money was quote unquote free, or
Right.
seemed or felt free. But now we're sort of seeing those same folks who have a great interest rate who now are either sitting or have decided they're going to sit on that house forever because they can't afford 6.5 or 7%, or if they're facing a big life change and they have to sell a house and they put very low down for a down payment. Lots of those folks, especially in numerous places in Texas, San Antonio, Houston, Corpus Christi, they're either at a break even point or they're upside down.
Yep.
I was going back through and looking at some numbers recently. Obviously, we had a lot of folks in crisis 2008, 9, 10. Folks getting into arrears, folks getting foreclosed on. And since COVID, I mean, it's not as severe an increase as it was back then, but since 2021, you have that same increase with
Yep.
an ever increasing number of folks getting further and further behind on their mortgage,
Right.
even with a lot of these mortgages being at 2.5, 3%.
And what's fascinating about that is I'll get clients now who are in a position where they're behind, they're looking at options. And if you asked me 5 years ago, is the loan modification process the way to go? I would say that's a great option because you can oftentimes, refinance through this loan modification process and oftentimes get an interest rate that's less than what you had. But
Right.
now you're like, oh, okay, the bank's gonna say I can save my home, I can get back on track making these payments, but oh crap, I had a 2% interest and now this loan mod's gonna be at 7 or 8. I don't even know if I can pay these. And it's like, okay, this doesn't help
Right.
you. So I'm actually doing more short sales, more deed in lieu. Actually, I would say the one option that I'm seeing more than others is I'll call the bank, I'll say, let's put the whole process on hold. My client's going to try to sell. But here's the other complication. I don't know if you've been trying to sell any homes lately. It's not as easy as it was just a year ago or 2 years ago. It is definitely not a seller's market, from my understanding. So,
No, it's not. I mean, I've been very upfront on this podcast that I'm a realtor. I'm helping folks, all the time trying to solve these problems. And comparatively few clients come across me on my desk that have any significant equity in their home. I mean, tons and tons of them, especially in
right,
a place like San Antonio, are, they bought in that 2017, 2022 window. They're competing with new builds. They don't have any equity. They have a great interest rate, but they've just been told, job change, life change, whatever. They have to move, transfer for their job, and be in a different city in a month, and so they have to dump the house.
wow,
So lots of folks are in a, very unenviable position of having to lose money, having to bring money to the table potentially, and money they don't have. So what do you then do? And sure, I mean, the short sale process is just it's like it's designed to be Byzantine and impossible
Mhm.
and and
Of
wildly
course, yeah,
complex.
absolutely,
And so it takes, I mean, a traditional residential real estate sale is already complex. But at least it's reasonably common enough that you can sort of replicate it. But as
right.
soon as you start getting into REO properties and short sale and trying to figure out how to address these varying parties and their interests, it turns into something that's just orders of magnitude more complex in my mind. And so again, this it feels to me like we are in a market and we are in a system here that is, especially now in this administration, it is designed to work against the consumer. It is
Yep.
designed to benefit moneyed interests, and the average person doesn't have a say.
So I'll make a couple more points about the interest rates here in a moment, but in a little bit, we'll have some examples on why I think that statement you just said is true, especially with some of the programs that have been around that are getting slashed and defunded,
Right.
um, all under the guise we're cutting waste and we don't want big government. And there's always been this intellectual argument of how much government is too much, and I think there's some great arguments on both sides, but a lot of the programs that our government has put forth over the last couple decades, a lot of them were aimed at helping consumers. And so that's the big problem. But, going back real quick to mortgage rates, I mean, they've been essentially, they've remained elevated since 2023. And so I believe this ends up leading to a surge in refinance applications, um, uh, especially since 2024. Now, I read it somewhere, I want to say it was US News. There were some analysts expecting that the 30-year fixed to bounce between 6 to 7% for the next 2 years. But I always put a caveat on that is that that's an estimate, right?
Right.
No one knows for sure. And that obviously can change because investors can, they look at digesting the various changes in economic data. I know that these rates have declined slightly, but there's so much volatility right now in the markets, especially with the tariffs. And so it's going to be it's uncertain. And as far as the tariffs, I mean, we're not going to spend much time on them. One moment we think there's tariffs coming in one sector, and the next they're not, and then it's such a
Right.
cluster. And
25%, 110%, 3%.
yeah,
Right. Like,
and
okay. Right.
and there's so many people that are against them, but yet I'm sure if you dig far or look far enough, you'll find someone who's in favor. But we just don't know what the outcome is going to be just yet. But a lot of these are economic factors too. And so I want to kind of focus on what you mentioned a moment ago or what are some program changes, or what are some things that are the Trump administration is intentionally doing to try to change the market? And I found it interesting. There are a couple programs that are changing over the next couple months. Number one is the U.S. Department of Veteran Affairs. They just continued the Veterans Affairs Servicing Purchasing Program, VASP. And for those of people that don't know what that is, it was a program that was originally designed to help borrowers, specifically military families, obtain affordable payments when they were delinquent on their mortgage. And that program is being scrapped under the guise that it's wasteful, it's not really doing too much. But I would disagree. But again, example, one program that just kind of going to the wayside. I know that Congress at the moment is already working to dramatically reshape the student loan repayment plans, restricting access to Pell Grants. I think it's no surprise that the current administration is strongly opposed to any kind of debt relief, as opposed to the prior administration. And so I suspect that the plans that we see and the programs that we see in the future are going to share that sentiment.
Right.
Um, and of course, for those that don't know, current administration is also looking to discontinue something called disparate impact claims. And these are claims that allow consumers to challenge a wide variety of discriminatory practices aimed at people of color, people with disabilities, families with young children, and women, among others. These discriminatory practices would otherwise, I think, even when identified, will probably go unaddressed. And so I would argue that these claims have exposed some problems in the past, and now that may go away. Now, the other thing with this current administration is this: our president likes to write all these executive orders as if they mean something, and
Right.
and most of the time they don't mean jack crap. I mean,
Right. Right.
90%,
Right.
I'm throwing out random numbers, 90%, but most of these orders, you can't, like, for example, you can't just gut the Department of Education on a whim. It has to go through Congress.
Right.
And even if there is a way to go through it through executive action, it's going to get challenged in the court. So a lot of these things aren't going to go anywhere, but it does give you an insight as to what the current administration is thinking.
Right.
I would argue that the biggest change, the one that I'm not happy with, and this is one that we'll talk more about next episode, is the changes with the Consumer Financial Protection Bureau. I believe on May 1st, or was it at the end of April, the U.S. House Financial Services Committee voted on party lines to slash the Consumer Financial Protection Bureau's funding by 70% and to
Unbelievable.
essentially effectively eliminate a penalty fund that basically provided over $1 billion to people who are damaged by various companies and lenders for unscrupulous practices. I would argue that this is an example where it doesn't matter what your political affiliation is. This move is going to handicap an organization that has done a lot of great work for borrowers. Now, I
Right.
can think of a good friend of mine who's a diehard conservative and who's a crusty libertarian and all that, and he would sit here on the show and say, "Well, boys, you don't understand. CFPB has too much executory regulatory power." And there's that's not a frivolous argument. It's actually a decent argument. The question is how much power should the administrative state have? And that's a conversation for the other day. All I'm caring about right now is helping everyday consumers and homeowners,
Right.
move, go on with their lives.
Right.
We can have the too much power argument at a later time, but let's at least help people.
Well,
So
and I mean, and by slashing that budget, I mean in my mind just seems to say to folks, would you like to behave unethically, in this arena? By all means, proceed.
right.
And so if you would like to be, prejudicial in your approach to these practices, you are now, if not being given the green light, it's pretty clear that there's no downside for you if should you choose to go in that direction. So
I will.
it's just sort of crazy to me.
Yeah, absolutely. I guess I would leave on this because we could probably cite to dozens of examples, but I think we're going to see a lot of turmoil and a lot of chaos in the coming months, maybe years. But the one area I hope we don't see a lot of chaos is how we enforce these laws. And what I would tell consumers as a legal advocate is yes, there are judges who are appointed by conservative lawmakers. There are judges who are appointed by liberal lawmakers. There are judges who are elected by liberal majorities and conservative majorities. But I would say, as a whole, most judges do the right thing. They don't make up the law. They say what the law is. And I would say that there are a lot of Trump appointed judges that I've seen over the years do the right thing.
Right.
And the attack on the judiciary, I don't care what your political affiliation is. This is bad. It's, it
Right.
is not good for democracy. But I will say, I'm seeing a lot of court decisions come out in various avenues and topics, and so far, I'm really pleased with how the judiciary is standing tall for the rule of law. And consumers have that at the very least. If you are being taken advantage of by, unscrupulous bank practices, the law is still there. It's not perfect. It's expensive. It's clunky. Um, but I mean, I just had an eviction case recently, a terrible case. Husband and wife were getting divorced. Husband went AWOL for years. The wife didn't realize all the debt that he incurred, and they lost their home to foreclosure, and they were getting evicted. And it wasn't her fault. She put all of her trust in her husband, and he's now out of the picture. I got in front of a of an old crusty conservative judge, and at the end of the day, he did the right thing, and he said,
Right.
"Yeah, this is not equitable. This poor lady's going to be homeless for the conduct of her ex-husband." And so we ended up working out a deal with the bank to keep her in her home for quite some time, and then she eventually had to move out. But so yeah, I would say the rule of law is still there, but I don't think that's going to change. Even though there's probably people out there listening, they're like, "Oh no, we're doomed. Democracy's doomed." And I'll tell you what, democracy is going to take a big punch to the face, but I don't think we're doomed. Not yet.
Well,
So,
that's heartening to hear because I mean there is this. I mean, I certainly have this impression that there are, some folks will happily apply double standards, and will make the case that certain behavior is only improper if you're in the opposing political party. So hopefully there is that's the slippery slope, right? So hopefully the law is blind to that, and right is always right and wrong is always wrong, regardless of who the parties are. But so I get why folks are dubious of that, but hopefully that's the case.
yeah.
Yeah.
But so in sum, I would say lots of changes coming. There's a lot of great resources out there. I'm a big fan of the NCLC, the National Consumer Law Center. That's a great resource. Now, yes, that resource is very, very pro-consumer,
Right,
but
right,
I would suspect most people listening to this podcast are consumers, people that have questions about the foreclosure process. So that would be a great place to go to get some information. But as far as the CFPB stuff, I'm happy to dive into that next time in a little bit more detail, specifically how that organization has helped people and how those regulations have kept more people in their homes.
right. All right, that sounds great. I mean, we started this podcast a couple of years ago under the brand Texas Foreclosure Podcast. It's now going to be under sort of a broader umbrella because we realized that there are folks in Texas, but everywhere, Midwest, Northeast, across the country that are facing these same questions regardless of where you are. In our prior versions, we did episodes on forbearance, how to avoid foreclosure at all, how HOAs impact things, and so we'll be re-releasing those episodes here over the following weeks. But we'll be coming to you weekly going forward. If you have questions, have issues, there is going to be a form on our website you can go to. If you need help with a realtor in your area, an attorney in your area, please reach out through that contact form, and we will do whatever we can to help you. And thanks to Jason for being with us yet again.
Absolutely. And just to kind of put a little plug in, our law firm has recently expanded into the Midwest. So if we have any Midwest listeners, we have lawyers currently licensed in Minnesota, as myself. And then one of my partners, she's licensed in Minnesota and Wisconsin, and we're looking to add Iowa here in the near future. So foreclosures in Minnesota and Wisconsin are vastly different than Texas. And maybe we'll spend an episode talking about those differences. So,
Okay. All right. Thank you.
all right, thanks.